Welcome to Tax Insights, presented by Hawkins Ash CPAs.
And good morning, listeners. Welcome back to Tax Insight here on WOMT. We're talking with Jeff from Hawkins Ash this morning. Jeff, good morning, sir.
Good morning, Terry.
Today's topic is about the Build Back Better income tax.
It is because, over the summer and fall, there has been a lot of talk about the tax legislation that's going through Congress. And like you said, it's called the Build Back Better Act. And this legislation has gone through the House and is now in the Senate. And they're hoping for some kind of passage here before the end of the year. So that's what I want to talk about is what's currently in the plan.
So when it first came out, there were a lot of tax changes, correct?
Yeah, so it was going to be a very large bill that would mainly affect like wealthy people, but it was also going to impact others. And that has now been scaled down, at least at this point.
So that's because of Senators Manchin and Sinema, correct?
Right. So since the Senate is tied at 50-50, the Democrats need every single vote in order to pass anything. This means that if those two senators don't agree, it's not going to pass. So the bill had to be severely watered down because of that.
So let's talk about then what right now is currently in the bill.
So a couple things that are in the bill that we should talk about is a new surcharge for those married couples making over $10 million. There's a 5% surcharge on that income, and over $25 million worth of income, there's a 8% surcharge on that income. Now, a lot of people obviously aren't going to fall into those categories, but what really happens is when you're looking at a trust return, those same surcharges start at an income of $200,000. And in some trusts that we even have locally, it's not hard to get to that $200,000 income level. So it's probably going to affect those returns. And that would start as early as next year, 2022. There's also a provision that would expand the 3.8% surcharge. It was kind of called the Obamacare surcharge. And in the past, it only included investment income. With this new bill, they're looking to also include business income into that 3.8% surcharge, which is going to affect a lot more people. And that would be for any married couple whose total income is over $500,000. And that would also start next year in 2022. But here's the one that I think is going to affect more and more people than those. And that is the expanded state and local income tax deduction. So currently, if you're itemizing, the most in state and local taxes that you can deduct is $10,000. This bill is looking to increase that to $80,000 for married couples. So at that point, a lot more people will itemize than have been doing it in the past. And this potentially is going to start here in 2021. So we're going to want to keep paying attention to that because there are certain people that may want to pay the real estate taxes or maybe their state income tax estimates before the end of this year.
So then let's talk about quickly what is out of this bill right now.
So right now, they were looking to do a tax rate increase from the 37% bracket up to 39.6. That's out as of now. They were also looking to increase capital gains from 20% up to 25%. That's currently out. They were also looking to do some limitations on qualified business income, which is a 20% deduction that some business owners get, if your income is higher, and that is out at this point. Also, the corporate tax increase, which they were going to increase from 21% up to 26%, that's out. So far, good news on those items of tax increases.
Jeff, a lot of great information. Obviously, a lot can change in this, so we want to stay on top of this. How do listeners connect with the team at Hawkins Ash?
I would go to our website, which is hawkinsash.cpa.
And we'll talk to you next week here on WOMT.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs, part of your business, part of your life.